Just when you thought, guys, just when you thought the markets were coming back, we had a couple green days. Well, the markets smacked us all across the face, smacked us with reality, and we had a red day. We had the S&P down 0.7% today. We had the Russell down 2.3%. We had the Nasdaq down 1.5%, and believe it or not, the Dow ended up breaking even. So today, you guys know the drill. We're going to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, hit that good old like button, subscribe, check out my Patreon if you guys want all my moves in the markets in real time, call outs, morning videos, all that good stuff. And you guys could also get 50 free bucks from M1 Finance and 2 juicy old stocks from Webull up to $1,600. All of those, the Patreon, the free money, are linked down below. And with that being said, let's get into it. So you guys saw the title, right? Dead cat bounce. Is it a dead cat bounce? That's pretty much the title of this video, and we're going to break that down in this video, which is why I titled that for this video, right? And you guys can see SPY. We'll start with SPY since that's what we always do here. Then we'll talk about Triple Q. You guys can see SPY went from 473. That was on the 22nd of November down to 448. So we had about 6, 7, 8 trading days of straight up selling. That was a drop of 5%. And then in just 2 trading days, 2.5 actually trading days, we recovered pretty much all of that. We went from 448 all the way back to 470. We rallied about from 448 to 470. That was about a 4.5% rally, recovering pretty much all of that 5% loss. And this, again, like I said, came in just 2.5 days. And that begs the question, is this a dead cat bounce? And the truth is, it very well could be. And, you know, a dead cat bounce is kind of what you get when a market is very deep in the red, which in this case, okay, 5%, it's not too deep in the red, but whenever a market, let's say an ETF, a stock, index, whatever, whenever it falls aggressively in one direction, down in one direction, because falling means you're going down, right? A dead cat bounce means, okay, we see a bit of a relief rally, maybe an extended relief rally for a couple of days, and that's kind of what we got in the past couple of days. Again, from 448 now to 470. So I'm not jumping the gun and saying for sure it is a dead cat bounce, because look, we're still above the main 180 moving average, and we're still seeing a golden cross, at least here on the 20-day chart. Now, when will I say, yes, it was a dead cat bounce? I will say that when and if we break under 460. That is right by the 180 moving average on this 20-day chart. If we do take that out and we start going 458, 455, then I would say, yes, it was a dead cat bounce, it was a bull trap, whatever you want to call it, it would be that, right, in that scenario. But at this point, we're just simply giving back some of the relief rally that we saw. We're giving back some of the gains that we saw over that 2.5 day period where we recovered 4.5%. That's all we're doing right now, and it's not like it's a free falling market again. It's just not. And with that being said, I'm going to be watching what SPY does between 460 to 465, not only tomorrow, but also later next week, the beginning of next week. So, yeah, it could be a dead cat bounce, no doubt about it, guys. And if tomorrow's a huge red day, it's going to be leaning more towards dead cat bounce. But as of now, with how things are standing, I'm not for sure saying it's a dead cat bounce quite yet. Triple Q, let's see what's going on there. Triple Q, this ended up rallying, like I said, in the morning video on Patreon. If you guys saw it, we talked about this before as well on YouTube. We rallied up to 400. 400 was resistance a couple weeks ago, and this didn't recover nearly as much as SPY did in terms of, you know, the sell-off. This went from 408 to 378, so it lost about 7%, and it only recovered about 4.5% of that. So a little over half of that loss was recovered, and now we're dumping again. I mean, today QQQ went down 1.5%. We're holding on by a thread above the 180 moving average, and I would say this does look more like a dead cat bounce than SPY's chart does, because we're much closer to the 180 SMA on the 20-day chart on Triple Q than we are on SPY. So if this takes out 392, we break under 390 in general, back into the 380s, you bet your you-know-what, the rally that we saw was a dead cat bounce. It was a bull trap. And again, this is looking a little bit more bearish, the chart for Triple Q, as opposed to SPY. So what do you guys think? Let me know down below in the comments. Do you think this is a bull trap, dead cat bounce? Are we going to be ripping back up from here? What do you think? Let me know in the comments, and make sure to hit the like button. If you guys are finding value in this video, hit the like button. Make sure to subscribe as well. Just doing those two things, which are free, by the way, it helps my channel out a lot. Helps me in the YouTube algorithm, and we are trying to get 25,000 subscribers by the end of this year. We have about 3 weeks to do it. 500 subscribers left. Will we do it? I don't know. Make sure to subscribe. Help out the efforts here, guys, and let's go over some stocks. So number one, we got to talk about Kroger, ticker symbol KR. Kroger looks pretty good right here. The stock went up 2% today amidst all of the selling in the markets, and we covered this recently when they reported earnings. They reported pretty strong earnings about a week ago, and the stock got pretty overbought when they reported those earnings. And I mentioned to you guys, look, Kroger, good earnings, chart looking great. It was looking great, and we just needed a pullback. Now we got that pullback. We hit 45.50. Now we're back down. Well, we did go under 43. Now we're in the mid 43s, high 43s, and it seems like point blank period, it's holding the uptrend. We hit a higher high. We're pulling back. We hit the 50 moving average on the 4-hour chart. Buyer stepped in there. We're holding it at a higher low, and now we're bouncing back. So Kroger, the chart looks great. I mean, what else can I say? Some levels that I have coming up here where I believe we could ultimately get to. Number one is that high from back in the summer, August. We hit 48.50. I think there's a very high likelihood Kroger gets there. Not next week, probably not the week after that, but if you have a couple months time horizon, I think Kroger could get there. The next target would be probably more close to when I'm filming this video in a shorter time period. It could get there. It's 45.60, which is where we just were after they reported earnings about a week ago. So I think we could recover to 45.50, 60, and if that breaks, then we're probably going to fill the gap, like I mentioned, to that high from back in the summer, 48.50. So watch out for Kroger, ticker symbol KR. I think it's setting up quite nicely here. Pfizer is as well. Pfizer, this stock's been killing it. We all know why. It's no secret at this point. It went to 55.70. That was back in the end of November, and then we ended up pulling back to about $49. That was a 10% little correction there, and buyer stepped in right by the 180 moving average here on the 4-hour chart. Buyers bought it up. Now we're back over $50 a share. We went up 1.3% today amidst all of the selling, and we closed right under the 50 moving average. And I think if this breaks $53, we're probably going back to test that high from recently, and honestly, we're probably going to take that high out. So I'm going to set my alert at $53. And am I seeing an inverse head and shoulders here? Hold on a second, guys. Yes, I am. Let me show you this 10-day chart. Look at that textbook inverse head and shoulders. Let me actually draw it out so you guys can see it. We have the left shoulder right here. We have the head right here. Let me show you guys the head. Boom. We got the head right there. And then we got the right shoulder right here. So head and shoulders, inverse head and shoulders is playing out on Pfizer. Now, if we end up breaking that $52.50 to $53 level, which again is where I just put my alert, that right shoulder in the inverse head and shoulders is going to complete, in my opinion. And again, we're probably going to be going to $55, $56 per share. So watch out for Pfizer. Enphase is another one that I'm looking at right now, ENPH. This is one that, if you guys remember, they reported earnings and the stock went bananas. Let me get some water here, guys. Hold up. Man, my throat's getting a little scratchy. It's that time of the year. I'm in New Jersey right now, guys. It's like 30 degrees out. Let me check my watch. It's 39 degrees out. So it's not frigid yet by any stretch of the imagination, but it's getting cold, right? So you know how the weather changes, you get all whatever. Back to Enphase. You guys remember, they reported earnings back in, when was this? End of October, and the stock went berserk. I mean, it went from 180 to 280 in the matter of a couple of weeks after reporting, and that's just unsustainable. You guys that have been in the markets know, if you're a beginner, you will soon realize this. When stocks go up not hundreds of dollars, I'm exaggerating a bit, but when stocks go up 40-50% in a month, in a couple of weeks, it's really not sustainable for the most part. Sometimes it is. It depends really what you're looking at. But 95% of the time, if a stock runs up 40-50%, like Enphase literally did, 40%, it's going to see some sort of pullback. I'm not saying it's going to give back the entire gain, but it's going to give back some of the gain. And in this case, like I said, Enphase went from 175 to 280, so it ran 40%, and now it's at 215, so it's pulled back about 25% after running 40. So net, it's still up 15% after that earnings report, and I think if you were patient with Enphase, and I'm not giving you financial advice, but and this goes in general, right? If you're patient with stocks after they report good earnings and they shoot up, if you wait a little bit, a lot of the time they'll come back. They're going to sell off, and that's kind of what we're seeing with Enphase here. It shot up, it's selling off. Today it went down 4%, and we're right by the 180 moving average here on the 4-hour chart. And mind you, we did close under it, so I would like to see a break back over 220, 225, and at that point, if we start breaking above the wedge that I have drawn out here, the moving averages, this could be a nice play, a nice breakout play, but we're not there quite yet. But I'm going to be watching it closely. Now, let's talk about Lululemon. They reported earnings today. I did not see what they reported, and we're going to talk about it right now live on the video, so make sure you guys hit the like button. You like how I snuck that in there? Hit the like button if you haven't done so already. Now, Lululemon did $1.62 EPS in the third quarter. Is that adjusted? I don't think that's adjusted. So $1.62 versus $1.41 estimated. So they beat EPS and they beat sales. $1.5 billion versus $1.44 billion estimated. And they see Q4 2021 revenue between, let's see here, 2.12 rather, to $2.16 billion versus 2.17. So they guided a little bit under the estimate for Q4 revenue, and they see full year 21 revenue, which is a little bit above the estimate. I guess that's good. They see 6.25 to 6.29 bill versus 6.27 bill estimated. So nice guidance, solid earnings for the third quarter, at least from a very brief glance there at the basic numbers, right? And the stock at this point, it closed 2% red on the day. It closed at 417 roughly, a little bit under that. Now it's above 422. So the stock's actually moving up about $5-6 after market hours. And we've broken this one down a lot. There's no need to talk too much about it. But overall, this stock has been uptrending for months. It's been hitting higher highs, higher lows, doing all that good stuff. And if that trend continues, which it might after this good earnings report, right? And now we're towards the bottom of the channel. If that trend continues, we're probably going to bounce here. Low 400s, start moving back, mid-high 400s. So keep your eyes on Lululemon, ticker symbol LULU. Facebook is another one, or excuse me, guys, I'm sorry. Don't get crazy on me. Meta, I got to get used to that. It's called Meta now, ticker symbol FB, and I think, what's their ticker going to be when they, I think we talked about this before like a month ago. I said they should name their ticker Meta, and then somebody commented there's an ETF that's ticker symbol Meta. Let me actually see if that is true. Oh yeah, there it is. Metaverse ETF, ticker symbol Meta. Of course. I mean, that's amazing marketing. You just buy that. I'm sure there's millions of people out there that just said, Meta, let me see if there's a Meta ETF. I'm going to buy it without even looking into it just because the ticker's Meta. I'm sure a lot of people did that. But Facebook, they're changing their name. As you guys know, that's old news at this point. And the stock it's been down. I mean, the stock's down about 15, a little bit under 13 roughly percent from the all-time high at 384. That was a couple months ago. Now we're at 329. And as I'm making this video, guys, we are testing the top of the downwards channel that we've been trading with them ever since the sell-off started, which again was back in early September. That's when we hit that all-time high. So I'm looking to see if Facebook or Meta, again, don't get on my case here, guys. I want to see if it breaks out of this downwards channel. Do we break 335, 340? Is there momentum out of there? Is there a rally coming? If so, this could probably touch 360 to 380 again, that broad area or zone, range, whatever you want to call it. Especially if it breaks 350. You guys can see 350. That was resistance. When was that? A couple weeks ago, back in the middle of November. So I think if we break 340, I'm going to put my alert right there. We go 350. There's going to be some resistance at 350 again because that's a resistance here from a couple weeks ago. And if 350 breaks, then I think it's off to the races at that point. I think we're going to go ultimately to 370 to 380 bucks. Now let me get some coffee in me, guys. So yeah, I see some upside in Facebook. We just have to wait for the confirmation, technically speaking. Microsoft is another one that I want to point out something here. It's setting up very, very similarly to how it did a few months ago when we called it out. And you guys can see I still have my analysis here from a few months ago. Do you guys remember back in September, early October, we were talking about this inverse head and shoulders that was setting up? I can literally zoom in and show you guys, right? You had the left shoulder here, you had the head, you had the right shoulder, and I told you guys, look, this was setting up for a move back over 300. It did that and some. It went over 300 all the way to 350, and now we're seeing a pullback and the same exact pattern setting up before it broke out, or same pattern we saw before it broke out last time is what I'm trying to say here, right? So I'm not saying it's going to go up another 50 bucks after this inverse head and shoulder setup like it did last time, but I'm just saying, look, watch for a move back to the mid 300s. We're setting up inverse head and shoulder, left shoulder, head, right shoulder. We're now above both moving averages. So if this plays out in the very short term, Microsoft could go back to 50 bucks, or 350 rather. If it went back to 50, guys, that would not be a good day on Wall Street. Let me tell you, we'd have to be buying Microsoft at that point. But then again, if it went from 350 to 50, there would be something very wrong fundamentally that we probably wouldn't even want to buy the stock. But overall, set your alerts. Microsoft is setting up, in my opinion, for a breakout to 350. I'm going to put my alert at 336. Watch what it does from there. And the last one, which did pretty well today, at least last time I checked, is J&J, and it did. It went up 1%, up about $1.50 on the day. Now we're breaking above both moving averages, which is a very good sign overall. And I think if we take out the highs from a couple weeks ago, about a month ago, a little over a month ago, 166, 167. I'm going to put my alert right there. That is where we're going to see a full-on breakout on Johnson & Johnson. And I covered this before. I've talked about it before. I think J&J could go back easily to the 170, 175 level. No problem. No doubt in my mind. And that's kind of what I'm looking out for. And you guys can see overall on the 3-year chart, that's kind of what's setting up right now. So overall, that's pretty much it. We broke down the markets. We talked about some stocks like we always do here on the channel. And if you guys like this kind of stuff, I'm sure you do if you stuck till the end. Make sure to hit the like button. Subscribe if you haven't done so already. Hit that notification bell as well so you're notified every time I make a video. And drop me a comment. Let me know your thoughts. Was today's rally, or not today's rally, the rally we saw recently, was it a dead cat bounce or not? I'd love to know your thoughts. And make sure to check out the Patreon if you guys want to work more in depth with me. You want my buys, my sells, call outs, all in real time. You get more access to me throughout the day. Morning videos, videos every trading day. All that's on Patreon, link down below. And you guys could also get $50 free from M1 Finance, M2 stocks from Webull, up to $1,600. All those are linked down below as well. And make sure to check out my video from earlier. I made a video going over a stock that I started buying yesterday. It's undervalued in my opinion. It's way too beaten down for no reason. Well, there is a reason, but I think they're going to bounce back. Check it out. I'll pop it up here. I'll see you guys there. Thanks for watching. As always, keep crushing the market. Stay safe out there. Peace out.